Welcome back to BLOCKTV. Bakkt, the Intercontinental Exchange's Bitcoin's future trading platform, went live a short while ago, offering daily and monthly physically settled future contracts. The launch was much anticipated in crypto circles, being seen as a potential on-ramp for institutional investors. Here's BLOCKTV's senior correspondent Asher Westrop-Evans with the details. Asher?
Thanks, Ron, for passing over to me. Well, the long-awaited day has finally arrived. Bakkt has finally launched its Bitcoin futures trading, with sleek physically settled contracts and a slender institutional warehousing for custody of the coins, protected by a $125 million insurance policy. It seems that Bakkt and their parent company, Intercontinental Exchange, have all the bells and whistles. Yet, as with all things in the crypto sphere, this story may be a case of buy the rumor, sell the news, as on the day of reckoning, Bitcoin prices have gone absolutely mild, to say the least. The first Bakkt Bitcoin futures trade was executed at a price of $10,115, and since then the market has tumbled back down, with Bitcoin now sitting comfortably back in the four-figure range. As of now, there have been 18 monthly contracts executed at a value of 1 Bitcoin each. Hardly rocket fuel, but continuing at a steady pace, and given we're only about 7 hours into this launch, perhaps this rocket, like the ones from Cape Canaveral themselves, take a little bit of time to accelerate before really gaining some serious speed. Regardless, it seems that markets appear to have a wait-and-see approach to this launch, with many eyes watching to see what impact Bakkt will have, and perhaps more importantly, whether this does anything to change regulators or institutions' views on the legitimacy of the Bitcoin space.
Thank you, Asher. We're now joined from LA by Joe Vazani. He's the founder and CEO of Lunar Crush, a company that monitors social media related to the crypto markets for real-time insights. Joe, thanks so much for joining us today.
Thank you for having me, Ron. I appreciate it.
All right, so a fast take. Bakkt was launched just a few hours ago, 8 p.m. Eastern Standard Time. You've had, what, 6-7 hours to see the impact. What's your fast take there?
You know, it's only been a couple of hours, and it's still early, especially here in the U.S., just past midnight. We haven't seen a lot on social yet. You know, we have seen a little bit of chatter around, you know, the low contract amount that's been out there so far, but, you know, I think it's still going to take a little bit of time before this thing takes off.
All right, and in terms of, you know, the immediate price of Bitcoin, I mean, we know, you know, this is a different product. This is Bitcoin futures, not Bitcoin itself being traded, but there was a lot of anticipation. I mean, at least a year's worth. Kind of looking ahead to this launch, thinking, all right, this is going to be the rocket fuel, so to speak, that's going to take us, if not to the moon, and out of orbit. But we haven't seen that yet, eh?
We haven't seen it, and you said a couple things there. It's been about a year since they've been talking about this, and I think, you know, some of, you know, the wind was taken out of the sails by, you know, having this being talked about for so long. You know, you probably would have liked to seen them line up a little bit more of a pipeline kind of going into this launch and some of the timing around it. But, you know, it could be a little bit more of a soft launch for them, knowing that they've already been out there talking about this in the marketplace. They want to test it out. They want to make sure that the technology is what it is in the public purview. And, you know, then they can start to ratchet it up. And I probably think they've got a couple of things up their sleeve.
All right. You have any ideas about what that may be?
No, nothing from my side. We're just listening to the chatter out there. I think the market's pretty bullish in general, though.
All right, I'm going to bring Asher back into the conversation. So, Asher, we're looking short term, as you said, not much going on. But what do you think we can expect in medium and definitely longer term?
Well, look, Ron, it's as I alluded to there, and I think as many have already touched upon in the crypto sort of social sphere and general in commentary that's come out so far, this has been so long in coming that people who are already interested were already bought in. The liquidity already existed in the market, and this is used as a speculative or a hedge-based you know, asset management and control. There aren't necessarily new institutions now within this short time frame coming on board instantly and saying, let's get in. You know, those that were already there were ready and primed for this a long time ago, and those that aren't are still playing the wait and see. And I think that's really the key point here. But in the medium and longer term, if this does play out, if it does see continued and steady growth, because let's remember, we're seeing currently a rate of about 2 monthly contracts being executed per hour. If that continues out, if you project that out over a long time frame, that's not bad. That's not bad at all. It just is a matter of seeing whether the momentum continues at a steady pace, whether it grows, or whether it does indeed stall, much like we saw, if we're sort of trying to make some sort of comparisons with the VanEck, SolidX, institutional ETF, BTF, whatever they want to call it.
Didn't exactly blow anybody's hair back.
Exactly, but this is different because this does have regulators backing. It has that institutional grade custody and warehousing and control, and that will hopefully, what so many have hoped for a long time, give a little bit more credibility to the market.
Yeah, and I'm going to go back to you, Joe. Is that something that you're looking forward to seeing as well? How institutional investors take to this, newish asset? I mean, we've had comparable products on other exchanges, but what's special about Bakkt?
And I think Ash was right. And I think at the end of the day, this is infrastructure building, and this is going to give institutions a little bit more faith in what's going on in our market and in our space, and having them kind of reach across and open this up, having it kind of physically backed futures market, I think is going to be really important for the institutions coming online now, and have them have the insurance policy, over $100 million insurance policy out there. I think this is going to be something that's going to kind of bolster and create a lot of bullish sentiment out there. And as this moves into the future, hopefully we can see more of these institutions come online, because at the end of the day, that's really what I think we're waiting for. And I think that the retail market, they might not be as savvy, but they want exposure to these assets. And I think it's going to happen through this institutional product.
Yeah, if I may, I want to touch on Joe's point there as well, because you got to remember, I mean, as looking at the wider macroeconomic space as well, having these institutional grade investment tools is critical for a number of reasons, most notably because there's been a series of reports come out in the last weeks and months talking about the fact that at an institutional level, there is a lack of, for all the fears of recession that everyone keeps throwing around, the fact is that the US in particular is on a record bull run, and the amount of liquidity available to institutions and to high net wealth individuals is massive. There is money that needs to be put in places, and there's actually reached a point where a lot of high net wealth individuals, a lot of institutions are looking at places and saying, we need to put our cash somewhere, we need to start putting our assets somewhere. This offers a crypto-based on-ramping for those who might be interested, who want to do a bit of hedging, maybe want to do a little bit of speculation, and it just allows those guys to invest with that security, with that insurance policy. And then also, and we have seen futures contracts before, but the difference being with that physically settled element, in meaning that it will actually bring that liquidity back into the crypto market and actually help to boost the space as a whole. But we need to wait.
Assuming they don't convert to fiat immediately.
Sure, but even so, even if they have to go through that crypto ramp, that Bitcoin ramp, you still get that access to liquidity for a while, you still get that exposure. But we do need to wait for those contracts to actually settle, which for the monthly ones, obviously, is still a month out.
Yeah, 30 days and counting. Now, we said institutions, we said regulations. Regulators, Jay Clayton of the SEC, we know, is heading to Congress, to the Hill, for a session later this week at the House Finance Committee, and he's expressed concern over time over custody and manipulation. Is this a step in the right direction as far as regulators are concerned in the U.S.?
I think absolutely. I think it's a step to proving that sort of the fidelity argument that keeps coming up. You need time just to prove that this thing works and works over time, and that you're not going to find gaps, you're not going to find holes. And this is a step to saying, okay, we can do this now, we can go through physically settled contracts, and it works. Touch wood that it does, but assuming that it all works out as intended, and even if relative volume here is not that high, it'll go a long way to proving a lot of the comments that came out in the Bitwise report that emerged yesterday, that there is this institutional grade quality in there, that there is the ability to have that sort of secure institutional warehousing and custody, which is critically important.
Yeah, Joe, over to you. What's your take on that? How important are these types of platforms for the ease of mind of investors, both retail and institutional?
Yeah, I mean, from an ease of mind, and also just to touch a little bit on the regulation, this is a proving ground for them, and I think that this, Kelly, they went about this the right way, talking to the folks in Chicago, down talking to the options folks, and getting everyone on the same page. She was on a lot of podcasts out there, and I think that step in the right direction and talking to them first and getting them onboarded before kind of going out into the market and letting them know the lay of the land when it comes to their strategy. I think that's really important. And I think that, from a consumer standpoint, I don't think that this changes much from a retail onboarding perspective. I think that that's going to take a little bit longer. But I think from an institutional standpoint, if this starts showing up in people's portfolios, if this starts showing up in people's 401ks, they're going to take notice, and they're not going to think about it from a perspective of, oh, wow, this Bitcoin thing, this is really risky. They're going to say, oh, wow, this is now an institutionally traded asset. Yes.
All right. And last point, and not to spoil Bakkt's party, but we're talking about a sphere that's unfortunately rife with scammers, and we've already got one on Bakkt, piggy banking on Bakkt, right?
Yeah, certainly. On one of the early tweets that Bakkt put out this morning, we had a scammer offering a deal in which you could, you can see it right there, and a Bakkt official BTC and Ethereum giveaway straight off there, right under the tweet, using a very legitimate looking logo with a Medium article ready to rock, offering 5,000 Bitcoin and 10,000 ETH right off the bat. Obviously pulling a scam right there. People got to be wary, be careful, and I guess that's more intended to grab those who aren't paying too much attention. Easy to realize it's not correct, but still, if you're not paying attention, you see that logo, it's right there underneath, it looks legitimate, it's
well, guys,
something we all need to be careful.
Ladies and gentlemen, look for the blue check mark for the verified account, definitely before you send any details to exchanges. Asher Westrop Evans, thanks very much in studio, and joining us from LA, CEO of Lunar Crush, Joe Vazani. Thank you so much for being with us on this special edition. Those of you at home, don't go anywhere. We'll be right back with more blockchain and cryptocurrency news.
For more news and updates, follow us on Twitter.